Welcome back to the Sprott Money News, sprottmoney.com monthly precious metals projection video for the month of October 2022. I am your laryngitic host, Craig Hemke, and joining us as usual is Chris Vermeulen of the Technical Traders. Chris, you're the man.
Hey, thanks for having me.
All right, everybody. You can obviously hear that I am going to have minimal participation. I'm actually on the rebound. I was about completely hoarse yesterday, so this is actually an improvement. Anyway, if you want to improve your precious metals position, you like that segue, Chris?
Yeah.
Head over to Sprott Money. Look, you can see we already got the Thanksgiving sale. What's Thanksgiving up in Canada, like the 1st of November or whatever?
It's this coming weekend. We were about to turkey it up and drowned ourselves in gravy and stuffing.
It's cold up there fast this time of year. Okay, fine. Yeah. So obviously the Thanksgiving sale is up and running at Sprott Money. And look, silver squeeze is trending again. There are a lot of stories out there about depleting physical reserves of silver at these prices, even though we've rallied quite a bit in the last couple of days, and we're going to talk about that. Never a bad time to buy yourself some physical silver. Sprott Money should be a site you always check whenever you're in the market. You can go to sprottmoney.com, see the details on the silver sale, or just give them a call, 888-861-0775. All right, Chris, I'm going to let you run with this. Last month, and even all the way up to about a week ago, things were looking pretty bleak. I mean, there were kind of margin call induced liquidity squeezes and all that kind of stuff. And it kind of reached a kind of an inflection point last week when the British bond market almost failed, and you had all these concerns about Credit Suisse, and all those things are still out there. But we got this hint that the central banks are going to go right down the same road they always have to keep the plate spinning. Where do you want to start this week? Tell us what you're watching.
Yeah. So if we start off, I find my focus has always been on the SP 500. If you know what the broad stock market is doing, which is kind of the mass market participants of investors, then you know if money's flowing in or out of them, and then you can zone in on kind of what sectors or commodities that money's flowing in. So I want to start off here just with the daily charts. So on the left-hand side here is the daily chart of the NASDAQ. And I consider this the growth sector, the growth stocks. And when we've got red bars, this is telling us when the trend is down from a technical standpoint. Money flow, intermarket analysis, there's a whole lot that goes into this. And so when the bars are red, we don't want to be involved in stocks. We don't want to hold any stocks. I don't care what sector they are. When they're green, we can get in and play some of these moves. And as you know, we've got our band strategy, which focuses on the best assets now. And when they're green, we get into the strongest sectors and ride the market up. And most recently, we got out of a bunch of different sector trades for some nice gains. We got into the dollar as the stock market collapsed. And now we're back in cash. And here we are with the stock market down at this level. And I've been talking with subscribers over and over for the last about week that the market is primed and ready for more or less a emotional type of bounce, an oversold technical bounce and an investor bounce. And let me just show you what I mean here, because we've been anticipating a strong bounce in the stock market. In fact, we're looking for a 7 to 12% bounce over the next couple of days. We're already up about 5 and change. But this daily chart here on the right-hand side is our tool that tells us what the average market participant is kind of feeling. It's the sentiment. And if we were to look at some of these bounces in the market, we've had some very, very strong bounces from the lows to the highs. And this happens over and over again when you're in a downtrend. And so these types of bounces in the market are really, they're so strong that they suck in the emotional traders, those who can get overly excited. They think it's a bottom. They jump in, they chase pricing. And we've been talking about how we are looking for, 7-8% bounce in the stock market. And what's interesting here is our analysis allows us to color code these bars. It's hard to see, but there's a deep green bar. Deep green means people are very, very bullish. And it usually happens just before the market collapses. We had another green bar here. We had about a week and a half of everyone getting bullish. And after each of these, the market has a very big collapse in price. Happens over and over again. We had it about a month ago. And that's what we're looking for now, is everyone here is like piling into the stock market. This is, totally expected. We're waiting for everyone to finally just finish buying up all of the sectors they're hot and heavy on. And then we're probably going to see sellers step back in to this market, and because the overall trend is down. So while we're anticipating a big bounce here, and there's still probably another 5, maybe 8% higher in the stock market, when the stock market bounces, it's like the tide going up. It lifts all boats. And we've seen pretty much all sectors have a huge bounce in the last 2 trading sessions. And of course, the leading sectors are going to have the biggest bounce. And we are seeing money rotate into the miners. We're seeing silver miners, gold miners, the COPX ETF, which is the copper miners, energy miners, uranium stocks. They're all top of our ban hot list, performing very well. And everybody's getting very excited, but I just want to be a kind of that negative side is that this just might be an oversold extreme bounce. And as you mentioned, we've got this added kind of hype into the market with the short squeeze and that whole kind of herd mentality kind of running in the same direction. And anything that happens when price goes parabolic, especially when it happens on hype news that the general public, everybody wants to try and make quick money, they usually end very badly. It's just a matter of time when that wave of money flowing in, that bubble bursts. So I know a lot of people are really excited thinking this is the bottom. And I'm just saying from a technical standpoint, this rally is most likely going to get sold into eventually. I think we're going to see lower prices down the road, and to just be very aware to protect your capital if prices start to roll over. So,
well, and for people listening, there's a fundamental reason for this, because in a bear market, people are getting short. And so bear market rallies are often very, very sharp because you've got 2 types of buying. You got the emotional people coming back in, like you said, getting long, but you also have short covering. That's 2 buys.
Yep.
And that's why they have these really sharp moves. Now, Chris, would you look for a higher high? Is there a technical level on the way back up that you might think, okay, maybe the lows are in?
Yeah. I mean, we're going to be looking for a few things to happen when, we're going to be looking for cycles to turn up. We want price on the indexes to get back above the 50-day moving average. That's kind of the most basic technical indicator that kind of kickstarts things. But we want to see defensive sectors underperforming. We want to see gold underperforming. We want to see utilities underperform. We want to see money flowing back into the growth sector. So there's a lot of underlying technicals. We don't so much need higher highs and higher lows for our core index strategy, but we need to make sure that big money is flowing into the stock market. It's flowing into the right sectors and groups, and there's enough volume supporting it that on the big up days or the up days, there's a lot of volume moving in, and the bias is shifting. We want to see the number of stocks in the whole stock market as a basket moving higher, because we saw for a long time huge divergence. Fewer stocks were making new highs back in 2021. Yet the index kept just grinding its way higher. And that was bearish divergence. When very few stocks are making new highs, yet the indexes just keep hitting new highs, it means the stock market is just kind of stretched. It's on the verge of breaking down. And that's what we finally have seen. And at this point, we're still seeing stocks, the majority of stocks sell off. They're making lower lows. And this bounce, I think, is just that. I think it's still going to be a bounce. But we might get another set of green bars if the technicals line up. That might be a week or 2 away, and there could be a very nice rally. There's just as much potential, I think, for a significant trade that could bring us back up to the highs that we saw back in August. There could be a great opportunity. And the fact, if we go to the ban hot list, we've got, if we get a new buy signal, we're going to be moving into these top sectors. SILJ's number 1, GDX, XOP, which is the gas and oil exploration miners. If we look at our alternative hot list, we've got COPX, uranium, they're all up there as well. So we're definitely seeing the miner sector taking lead. And we have seen this over the last 5 or so trading sessions. The stock market has been struggling, yet gold and silver miners have been moving up. So they're definitely leading the way. They're typically the first to bottom and rally when we're in this type of sentiment scenario. And it's a very good sign. Whatever's holding up the best or leading when the stock market is falling, they typically float up and take off really well when the market does put in a bounce or a bottom. And that's what we're seeing right now.
Well, Chris, then next, let's look at the dollar index then, because the dollar's been rallying on higher interest rates in the U.S., all this hawkish Fed stuff. But when the Bank of England, had that we'll call it just a temporary change of policy, because
Mhm.
it was probably permanent, but temporary. That kind of changed all the sentiment in the dollar a week ago. And the dollar's fallen 4 or 5 points in a
Yeah.
week.
Yeah.
And it's been kind of a, as the dollar's gone up, it's been risk off. As the dollar comes back down, it's risk on again. So if there really is a change here, if we are moving quicker toward a central bank pivot, then the dollar is going to start, breaking that uptrend
Mhm.
and falling consistently. And that's obviously going to be supportive of all the other stuff. So what should we look for in the dollar index? It's been riding its 50-day for about a year. What would you be watching?
Yeah, I think we'd be watching the 50-day to see if it's going to hold and stay up there. We've definitely seen, when the stock market sells off, the dollar goes up. When the dollar falls, we're seeing money flow back into the risk on assets. And this pullback is pretty sharp looking. But I mean, the underlying trend is still very strong for the dollar. And I feel as though it's still actually going to hold up and trade sideways. I think right now we're definitely in a news kind of based push for a bunch of different, for all assets to kind of have a big swing. So I think this is a little emotional, a little strong, and I think things will recoil. But if we close below the 50-day for a week or two, and then we see price potentially trade sideways, form a bear flag on the chart, then we'd be looking at something bearish. If we come down here and it starts to flag sideways, it doesn't just kind of rally and take off again, then typically you're going to have that next leg down. And if we were to do that, if we were to break the next pivot low, this is where precious metals could really start to take off, is that breakdown of the dollar breaking this massive, huge uptrend. And that could spark the start of a huge move in precious metals and miners. But we're not there yet, but that would be what we're looking for, is a bearish chart pattern. And then for that pattern to break down and confirm, okay, this trend has now officially changed for the dollar. And if the dollar is going to fall, there's a long ways for it to fall. And we could see a big move in the precious metal sector with that type of drop.
And it's never as simple as dollar up, gold down.
No.
I think most people know that. But
Yeah.
in this time that we're in, with everything hinging off of the Fed and the other central banks pivoting back toward weakening and quantitative easing to support the markets, that might be the main thing to watch. Let's move on to gold, because again, we're talking about buying physical metal here. And I was worried that if and when that 1680 floor was taken out in gold, because again, gold had kind of flagged sideways for over 2 years, between about 1700 and 2000 on the weekly chart. And my concern was, much like 2013, once the floor was broken, we'd run a bunch of stops and plunge a couple $100. I'm sure we probably talked about that last month.
Yep.
But we did take out 1680, and there never really were a whole bunch of stops. We traded as low as, I think, 1625, came back down to 1640 or 50 even just a week ago. But now it looks like it's back above 1680, back even above 1720 as we record this. What will you watch for, Chris, to kind of invalidate that breakdown? Maybe get us starting to think, okay, worst is over, the lows are in.
Yeah, well, we can look at it from different time frames. This is the weekly chart. And I mean, it did have a break below it. We're having a pop. This is the first week that it's back kind of above this blue line, this kind of critical pivot level. So we'll see where the week ends. Don't forget, this is still intra-bar. The week's really just begun. It seems like it's a little bit of a news-driven move for all asset classes this week, with rates and short squeezes and the dollar pulling back. Everything is kind of going haywire. So we'll see if it recovers back here. But the overall trend is still kind of down for the dollar. All the moving averages are sloping down. We're underneath all of them. We're still making a series of lower highs and lower lows. So we're definitely not in the clear just yet. And if we take a look at it from a monthly standpoint, we closed below it on the monthly last month. And here we are. This is the first month, and we'll see where the monthly closes. We could very easily see in the next, 25 days, gold roll over a few percentage points. It'll be back under there, and it'll just be an upper wick. Monthly charts are very powerful, and you really do need to wait for them to end. A lot can happen in a month. And really, we just need to see where that's going. So from a monthly standpoint, this is nothing more than an intra-month pop. But on a monthly basis, it did close down last month. I think this is an oversold bounce level at this point, simply because it's a major visual support level that almost, anyone, if you were to show them this chart and they saw those lows, they'd be like, well, I think it's hit this a bunch of times and bounced. It's probably a good spot. So there's a lot of bottom fishing. We've got news. Maybe that news was a whole hype was created to help try and create support for maybe the precious metals sector. And again, it's only a couple day bounce. And I wouldn't look too far into it because the daily and weekly chart is still clearly down.
Well, and as we record this on it's only Tuesday, this Friday is the next jobs report. So yeah, we had some great gains to begin the month, begin the quarter. But man, we're going to have to pay attention this weekend. I will remind everybody, I should just put this out there. One of the big components of each monthly job report is the birth death adjustment, the kind of where they just kind of give a statistical guess based off of how many jobs were added in September's past. And the birth death adjustment in September of last year was negative 85 or 6,000 jobs. So there's a chance that this Friday's jobs report in the U.S. could come in considerably below expectations. We'll see. But the weekly chart is going to key off of how we trade on Friday. That's for sure. Chris, speaking of downtrends, the GDX as a representative of all mining shares, at least gold mining shares. Yeah, but look at that. Slightly higher high versus that bump up back in September. And I think I noted yesterday was the first close above its 50-day moving average since April the 12th, for crying out loud. Jeez,
yeah.
6 months. What should we watch here? Those are some pretty green candles the last week.
They are. I mean, yeah, we're making a higher high. Obviously, from this high right here, we have now broken that. We're above the 50-day. It's the beginning of potentially a new uptrend. The only thing that really scares me is it feels like the sector has been very oversold. It feels like it's a news-driven, oversold, short covering kind of move, which is why we're getting these big gaps, these green bars going and going. So it can fizzle out very quickly. But this is the start. We have a higher high, but keep in mind we have a lower low. So I mean, overall, it's a mixed chart. It's not the greatest looking chart. This is the first step to it, carving out a rounding bottom or some bullish pattern to build a platform of maybe trading sideways in a bull flag, and then from what it does from there, we'll have to kind of just take it one bar at a time. So the trend to me is still down. The long-term 200-day moving average, all those are sloping down, and price is under that. So we just need to see how this is going to unfold. But again, this is the first step in the right direction if you want it to go higher. But it is, it's still got a lot of work to do. I think a lot of time before that really shift takes place.
Well, and to that end, I thought we'd save the most interesting chart for last. Because, well, if anything, I love silver. I've got a load of it. And I'm sure you do too. And Sprott Money sells silver. How about that? But it led everything down. It performed the worst. It started to break down in April before the shares, before the gold. And now it looks like it wants, like it's trying to lead everything back up to my eye. It has made a higher high. It's well above its 50-day. You've got there are a lot of people on Twitter that monitor the vault levels at the LME and the LBMA, the vault levels of the COMEX, not only in silver, but a lot of other base industrial metals like copper. There are a lot of interesting things going on in the physical market, obviously.
Yeah.
And the paper price, with a lot of hedge funds being short, they've gotten a religious experience these last couple of days. But as you point out, I mean, I can see about 3 other religious experiences those shorts have had in the last 60 days.
Yeah.
All right. So I was not going to talk this much for the obvious reasons, but here I am talking. Look, we're back above 21. 22 on the weekly chart was kind of equivalent to $1,700 in gold.
Yeah.
I'm pointing out some levels that I'm watching, but nobody cares what I think. What are some levels you'll be watching to make you think, okay, yeah,
Yeah,
We've
well,
turned
I'm
the
the same
corner.
as you. You're a technical analyst. 22 is a critical line. Obviously, you know, here's kind of an interesting scenario. So gold right now is like right in this fade.
Right. It is
And
broken down and
this
it's
is the
trying to get back
daily
above.
yeah, this is the daily chart. And so gold has done this little breakdown and now it's bouncing up
Yep.
on the monthly chart. So it's interesting. Silver's already broken down and now it's
Yep.
starting to come back up, but it is getting into this is going to act as a pretty major resistance area.
Mm-hmm.
Obviously, it's had a very strong move. I feel like it's a news based, a short covering news. So it's getting squeezed extra high. And I find the silver chart generally more difficult to chart just because I find it likes to make higher highs and higher lows and break patterns. I mean, to me, it's a little messier of a chart,
Yeah.
the way my brain perceives silver versus other assets. So I think it is it's getting overbought. I think it's kind of a hype-ish move at this point, and it's getting into resistance. But you're right. It's making higher lows. It's got higher highs. It's broken two previous highs, which is very important from a technical standpoint. It means it's got a lot of power that it can muscle through two resistance areas. But this $22 level is going to be one doozy to get through.
On a
And
weekly basis too.
we'll have to see what it does over the next couple of days if it can get some traction. But I mean, you're right. It led to the downside. Maybe it's going to lead to the upside. It's tough when the markets get convoluted with news interfering. That's like
Yeah.
all about, everybody buy the physical and create the short squeeze and stuff. It kind of, to me, it kills the chart. I mean, we already know there's manipulation, but that type of stuff to me
Right.
really kind of throws the last couple of bars out the window because I'm like, well, that's not, I mean, it's true demand. People are buying it, but it's kind of skewed and it's an emotional surge and you don't know how far that surge is going to go. For all we know, it rallies up to 28, right? It's really tough once the masses get involved and start pushing it around with emotional buying and hype and stuff. So that's where I am with silver. I find it's very difficult to gauge when you throw that into the mix.
I look at all those lines and your doodles, but I do, take those off. To me, it almost looks like there's a little bit of a inverse or reverse head and shoulder there as well at about 1850 and then 1750 and then 1850 with a little shoulder line up there around 21, maybe off of those lows in May and June. Yeah.
Oh yeah, big one. Yeah. There's a lot of levels, bro. I mean, there's no doubt from a technical standpoint, silver has popped and broken above these trend lines. All I'm saying is coming right into the next major resistance area, and it's based on kind of news. But you're right. It's making higher lows, higher highs. It's broken trend lines. It's in a technical uptrend right now. I just don't like to get involved with something that's parabolic, popping at resistance on news. But it's in an uptrend. There's no doubt about it.
Well, dollar cost averaging is, any financial planner advisor always say, that's a great way to do it. And maybe for the physical buyer, that's what they should consider here. If you're sitting on some powder, maybe you buy a little now, just in case it does go to 25 again. Maybe, but you save some just in case it pulls back to 20 or 19 again too. So anyway, the chart is interesting though. And again, a lot of it's due to positioning within the COMEX futures market, and those people getting squeezed, the hedge funds getting squeezed, that sort of thing. But if it can lead back to the upside, that could be a good sign. I think if we leave it here, Chris, to me, that dollar maybe is the most important thing to watch because because again, the dollar index is just simply comparing the US fiat to everybody else's fiat. And the euro's been in the tank, and the yen's been in the tank, and the yuan's been in the tank, and the pound has been in the tank, and I mean, you name it. So if things are going to change, if the Fed is going to start changing, then that trend in the dollar index, I think, would change too. Would you, as we wrap up, would that be maybe the main thing to watch?
Yeah, I agree. But based on all the moves on a lot of these currencies here in the dollar, you look at it from the weekly standpoint. I mean, this is still just a pullback in the dollar, and it's a bounce in metals in the stock market, which is what we've been anticipating. So, I mean, I'm not reading too far forward. The underlying trends are up with the dollar, down with everything else, pretty much, until proven wrong, and then we switch we jump ship and we switch directions. But I'm not one for trying to pick a top or pick a bottom in a sector. I'll pay a much higher price for it when it's confirmed and all the odds are there saying, this is going to keep muscling higher, but I don't want to just jump in because everyone else is. To me, that goes against my my kind of philosophy.
Right. Exactly. The old adage about not catching the falling knife is there for a reason.
Yeah.
And don't fight the Fed, right? If the Fed's going to continue to be hawkish, dollar's probably going to bounce and rally again. It's when the Fed finally signals not so hawkish and the dollar is confirmed to be breaking down.
Yeah.
Then we're rolling. All right. Well, thanks for pulling that up, Chris. Again, Sprott Money is the sponsor of these calls. So visit Sprott Money, buy your metal there, store your metal there. But if anything, geez, just give them a like or a subscribe on whatever podcast or video channel you're watching this, because that helps them too. And again, visit thetechnicaltraders.com if you're actively in there trading on a daily basis. Chris is one of the best to help you out. I know he's always been one of Eric Sprott's favorite technical analysts. Chris, they can find you at thetechnicaltraders.com.
Yep.
Go check it out, my friend. We'll see where we are by November. That's for sure. We'll be a lot colder, no doubt about that.
Sounds good. Yeah, it will be for sure. All right. Well, take care, guys. And thanks again.
Thank you, Chris. And from all of us at Sprott Money, sprottmoney.com. Thanks for watching. We'll talk to you again next month.